So price is always doing two things. It is seeking liquidity, right? And then it is rebalancing imbalance. That is all what price is doing. So price moves from internal range liquidity to external range liquidity, internal range liquidity to external range liquidity in that order. But before you start trading these pairs, there is one thing that you should know. There is something known as relative strength analysis, right? You have to perform your relative strength analysis to know the pair to short and to know the pair to long, right? So let's say right now you are bullish on Euro JPY, and you know that Euro JPY correlates with GBP JPY, right? So you ask yourself, which one is good for buy? Let's say right now you're bullish. Which one are you going to buy? That is when relative strength analysis comes in, right? You have to perform your relative strength analysis to know the pair to buy, right? And let's say if you are bearish too, you have to perform your relative strength analysis to know the pair that is best to sell, right? So for Euro JPY or Euro paired pairs, right? And then Britain dollar paired pairs, we are going to use Euro Britain dollar. We are going to use this pair as our relative strength analysis, right? So if this pair is bullish, that means that Euro is stronger, right? And therefore, we are going to buy Euro paired pairs, right? So if this pair is moving up, then any pair that is paired with Euro, we are going to buy it. You get it? So Euro XX, right? So if this one is bearish, that means that the Euro is weaker. And if Euro is weaker, then that means that Britain dollar is stronger. And therefore, any pair that is paired with Britain dollar, we are going to buy that pair. So, for example, right, we could clearly see that, as I always say, right, so you have to consider the overall market structure. So, looking at this, we could clearly see that here, Euro GBP is bullish, right? And if Euro GBP is bullish, definitely Britain dollar, sorry, Euro JPY, right, is bullish. Definitely Britain dollar yen is also going to be bullish because they are correlated, right? So now that we know that this market structure is bullish, we have to perform our relative strength analysis, right? We have to get to know the bias of Euro GBP, right? To know which one to buy. You get it? And we could clearly see that here price is targeting internal range liquidity, which is a fair value gap, and price is respecting it, right? How is price respecting it? We could see that this second candle has taken the first candle and closed inside this range. So price is willing to turn from this level, right? And come for this external range liquidity, right? So we could clearly see that we are bearish on Euro JPY, right? And if we are bearish on Euro JPY, then that means that Euro is weak. So if you want to buy, we are going to buy Britain dollar yen. You get it? So, and I said the other time that if you want your probability to increase, right? Because trading is all about probability. You have to trade in direction of the overall market structure. So in this scenario, we are going to wait for price to tag this internal range, which is the fair value gap over here, and see if we are going to get our swing structure over here to focus on trading, right? So we are not going to trade any reversal. Let me play price forward and let's see what is going to happen. I want to change this. I'm coming. Let me go back to the daily time. I want to change this to 1 hour, right? So we want price to restructure itself, right? And what's happening? So price has taken that liquidity. Let's just see if we get any bullish trade, right? So we could clearly see here that price has taken external range liquidity, right? And when price takes external range liquidity to go forward, internal range liquidity. So we could see that fair value gap over here. And we could also see that on Euro GBP, right? Price has taken external range liquidity.
Me?
And then
I
Hello.
Yes. Can I ask a question?
Yeah, you can ask.
Okay. Broader way, uh, that price comes to an internal range liquidity. The price came to a fair value gap in a broader sense. Is that correct? But
Yes,
you
yes,
told that's an external range liquidity.
yes. So
Actually,
when price goes to internal range liquidity to go to external range liquidity, internal range liquidity are order blocks, fair value gaps, breaker blocks, and external range liquidity are swing highs and swing lows. I hope you get it.
but in that case, the price down to a fair value gap.
Which one?
That's an internal range liquidity, isn't it?
Yeah, you can talk.
Uh,
You can talk.
Euro uh, in that middle chart, GBP the price down to a fair value gap.
Yes,
That's
it
actually an
it tagged a
internal
fair
range
value gap.
liquidity.
Yes, that is external range, internal range liquidity, and also took
Yes,
external range liquidity. You get it? You get it?
yes,
So after
yes,
that,
yes,
you have to look at what can cause price to come down. We can see is there a fair value gap? No, that is not a fair value gap. So if price has tagged this fair value gap, right? Let's say price has tagged this fair value gap, then it's going to go to this external range liquidity.
yes, yes,
Get it? You get it?
yes, yes,
But
yes,
then,
yes,
we've
yes,
seen our model, right? We've seen our model, right? If you look at Euro JPY, you could see that the second candle took the first candle, right? And then look at the third candle. So due to how the third candle closed, it shows that the fourth candle is also going to be bullish. You get it? You could see here that price didn't take that low,
yes,
but we've seen our model over here. So because this has also taken this external range liquidity and price is willing to move up, right? Price is willing to move up. That means that if we want to buy, this pair is stronger, right? So after your daily buyers, right? I mean you have to spend time on perfecting your daily buyers, and all what you use for daily buyers is internal range liquidity to external range liquidity. So after this, we've seen the model, right? You go to the 4 hour time frame, right? And on your 4 hour time frame, you have to make sure that the 4 hour time frame is clear, right? So on our 4 hour time frame, right? What time is this? This one is 21, right? Let us wait and see how the 21 candle is going to close. Because I don't want to trade 21. 21 is Asia section. I don't want to position myself there. Let's just see. We didn't get our model, right? The model that we are looking for is we want price to tag a point of interest. And when price tags a point of interest, we want to see first candle, right? Let's say this is our first candle, right? We want to see our second candle take our first candle low and then close inside the range, right? We want to see this. And then if we get this, then we can say for sure that price is going to be bullish, right? But in a scenario where the second candle doesn't close inside the range and it closes this way, then we have to wait for the third candle to print, right? And if the third candle prints and it shows a strong bullish candle, then we can focus on trading the fourth candle. So that's all what we are looking for. Get it? So we could clearly see that this is the 1 a.m. candle. Let's see, if you get a good or a nice candle closure. So we had a nice candle closure, right? But we are not going to position ourselves. What time is this? Sorry, this one is the 1 a.m. candle. We had a nice candle closure, which means that we could position ourselves on this 1 a.m. candle, right? So let me just cut it this way. So first of all, you have to look at what the price tag on the 4-hour time frame. We tag a fair value gap, right? And then we had our second candle closing inside our first candle range, right? And then we could clearly see that this pair is bullish. So it is better to buy on Euro JPY, right? So now that we've profiled the 4-hour time frame, right, we've seen that price has tagged a fair value gap. And because the second candle has closed inside the first candle range, we expect the next candle to be a distribution candle, right? So we will go to the 1 hour time frame, right? And on the 1 hour time frame, what time is this? This one is 12, right? So we wait for the 1 o'clock candle to open, right? So let's go to the 5 minute time frame and wait for our 1 o'clock candle to open, right? So what time is this? What time is this? 11, 12:55. So let's see when the 1 a.m. candle will open. So our 1 a.m. candle opened over here. Let's see if we get a nice CISD. So we know that this pair is bullish. Euro GBP is bullish, right? So we will focus on buying euro paired pairs, right? So we could see that we had a nine when the 1 a.m. candle opened, it took this external range liquidity and then price closed over. So we had that nice CISD over here, right? So because of that CISD, we will position ourselves over here. We place our long position over here. Let me just bring price here. This is where we had the CISD. And then we had a nice V shape. So we position our long position over here. Place the stop loss at that swing low. And then we will target 2 hour, right? Let's just target 2 hour. Or let's target this high and see if price will get there, right? So let's see if price will get there because we expect the 1 a.m. candle to be a distribution candle. And we could see that price finally got there, right? So let's go back to the daily time frame, right? Let's start from there. Let me go over once again. So if you watch the video that I posted on YouTube today, right? If you really understand what I was trying to say, I said that we always want to see this price signature, right? Let me go to the private mentorship group. We always want to see this price signature, right? When price hits our point of interest, this is what we want to see. This
Yes.
signature is what we want to see. I hope you get it. This is what we want to see. We want to see this same signature on the 4 hour time frame. So when you get a perfect candle two closure, then that means that the third candle is going to be a distribution candle. And if the third candle close shows strongly, then that means the fourth candle is also going to be an expansion candle. So in a scenario, right, in a situation where we hit a point of interest and then we don't get our second candle closing inside the first candle range like this, then we will wait for more data, right? So we will wait for the third candle to print and then we focus on the fourth candle. So on the H4 time frame too, if we hit a point of interest, right, and we don't get a nice candle closure, then we will wait for the third candle to print to position ourselves on the fourth candle. So that is the same thing that happened over here, right? If you look at this, we hit this key level over here, and we could see that our second candle took our first candle and closed inside the range. And because of that, we can focus on trading the third candle and the fourth candle, right? Now let's just look at how the fourth candle close. If it closes strongly, right, then it means we can focus on trading the next day. So let's see how the fourth candle close. So we could see here the fourth candle closed so strongly, which means that we can focus on trading this candle. And we expect this candle to be an expansion candle, right? So after doing it this way, we could clearly see that there is the strong pair, right? Look at how strong it is. So you go to the 4-hour time frame after this, right? And on your 4-hour time frame, this one is 17, right? You can see the time over there, 17 EST. We will wait. We will wait for 1 a.m. candle, right? So let's see what the next candle will do, how the next candle will print. And we could see that we have a fair value gap over here. We also have a fair value gap over here. The 4-hour time frame is clear. We have this point of interest. And this point of interest is where I can't really hear you. Can you type it? Can you type it?
Hello.
Yeah, I can hear you now.
Okay, okay, okay.
Yeah. Do you have a question? Hello, doctor. Hello. Were you asking a question?
Hello.
Yeah, were you asking a question?
Hello. Is the 1 a.m. candle indicates the start of
Yeah, the 1 a.m. candle is also known as the landing section. And 9 a.m. is for New York. You get it? Hello. Hello.
Okay. In another way, 3 to 5 in three trades, three trades uh, marked as 3 to 5 a.m. as London session.
Yeah, but you see,
Actually, it starts.
yeah. Landing section start from 1 a.m. to 5 for me. You get it? So the candle has opened, and we expect this candle to be a strong bullish candle, right? And this one is 21. So after this, we want to see how this will print to see if we will trade the 1 a.m. candle or the 9 a.m. candle. So let's see what will happen. And we could see that we didn't see our model over here, right? And you could clearly see that this 1 a.m. candle would serve as our reversal candle, but we don't want to trade the reversal candle. So we will allow this reversal candle to print. So since the reversal candle, you can see still prices willing to come down more. So let's allow this candle to print. This one is the 1 a.m. candle. I wanted it to serve as our reversal candle, but it didn't happen, which means that this 5 a.m. candle will be our reversal candle. We don't want to trade reversals. We want the reversal to happen, right? And then we will focus on the expansion. So let's see how the 5 a.m. candle will close. And we don't also want to trade the 5 a.m. candle. We want to trade the 9 a.m. candle. So here, the 9 a.m. candle open. I want it to go up just like that. Here, the 5 a.m. candle formed the reversal candle, right? It's formed the reversal candle. We tag a point of interest. We took our first candle and then we closed inside that range, which means that the third candle is going to be an expansion candle. So we will go to the 1 hour time frame to look at what is happening on the 1 hour time frame. We could see that we had a nice V shape on the 1 hour time frame as well. You get it? A very nice V shape. We go to the 5 minute time frame. We want to wait. We want to wait for the 9 a.m. candle to open, right? This one is 8:55. So let's allow the 9 a.m. candle to open. The 9 a.m. candle has opened, right? Let's see if we will get, and then it has tagged a point of interest. Let's see if we get a CISD. Okay, so we had a nice CISD over here, which means that we can enter around this place, right? And then let me look at this pair. It looks like this pair is the stronger pair. Yes, look at how it's moving energetically. So I'll focus on trading this one. I forgot to perform analysis on this. Let me look at the 4 hour time frame and see how this candle is printing. This is printing. So we've taken external range liquidity. Looks like price wants to come down. Let me go to the daily time frame to see how this is forming. This is showing strength, right? And the four hour is showing strength. So we will focus on this. Now that the 9 a.m. candle has opened, and we expect the 9 a.m. to be an expansion candle, it's opened over here, tag a point of interest. We had a CISD. We could place our long position over here, place our stop loss at the swing low, right? The swing low that formed the CISD. Don't know why this thing is not yet. Yes, and then we target 2 hour. We can target your 2 hour. Or let's just target 2 hour. Let's see how price is going to form. So this was the strongest pair, this one, because we had our this was the strongest pair. We were supposed to buy on this, but this is bullish. You see, this showed strength over here. You get it? This was stronger than this.
Yes.
We are supposed to buy this one. But let's see how this one goes. You see, this one was the strongest pair. That's why relative strength analysis is so important, right? You see here, it came down. This one was the strongest, so it gave us that 2 hour. See, the 9 a.m. candle opened over here. If we were to enter over here, right, we would have gotten our 2 hour. Get it, and even more. This is why you should spend more time with relative strength analysis. So this is why I said in the group that relative strength analysis is so important. It is so important. I don't know why this pair became the weakest, but this one was strong. So I don't know why this one is showing more strength. It's giving me SMT.
I can hear you.
Yeah. So let's see how the next candle opens now that we are done trading this.
Now, voice is
Can you hear me
disturbing.
now? I was saying that it is always um, advisable to, I mean, get to know the strongest pair, which pair is strong and which pair is weak. It's always advisable to know.
Understand.
So let's just look at this, right? I expected this candle to be the strongest candle, right? And we had a 4 hour liquidity over here. I just find it difficult drawing my lines these days. Maybe I have to do some editing or whatever, settings or whatever, I don't know. So that is why price 10, right? We took the external range liquidity. We entered over here, which means that, but still, this was the strongest pair. This showed more strength than this. Let's go to the daily time frame and let's do another more example. So price hasn't tagged any internal range liquidity yet. We've tagged a point of interest. We've tagged a fair value gap over here, taking some liquidity. Let's see. Let's just look at how this candle is going to print to see if we will still continue on trading. Right. I didn't really like how the candle printed, so we still wait for price to structure itself. Okay, so this candle is still strong. I don't know why. Okay, let's look at this. Is this showing some weakness? So we had our model over here. We had an inversion fair value gap over here, point of interest, that price tag. And when price target, we could see that our second candle took our first candle and closed inside. But because of how it closed, it is more advisable to wait for the third candle to print, right? To see if you are going to engage the fourth candle or not. And even looking at this, looking at how the third candle printed, I still don't really want to enter. So let's wait for more data. Well, there is kind of a respect candle. Let's wait for more data. You can see they don't work. Price didn't go up. Okay, let's wait for price to restructure itself. So these lows. Now I still don't want to engage price because we've not tagged any points of interest, right? There is no point of interest over here. Although we've seen our model over here, but there is no point of interest. So let's wait for price to restructure itself to tag a point of interest. So you could see that on this pair, right, we took external range liquidity. We also tagged a point of interest, which is a fair value gap. We expect price to move up, right? The same here. We expect price to move up. But looking at even ignoring this, right? Ignoring this, you could see that this is the strongest pair. This shows some strength compared to this. So now that our second candle has closed inside the first candle's range and giving us a nice closure, we want to focus on trading this candle, right? And we expect this candle to be an expansion candle to come and take this liquidity. So we go to the 4-hour time frame. And on the 4-hour time frame, you could see that the 4-hour time frame is clear. We have nice structures to targets, right? Nice structures to targets. And we always want to make sure that our target is intact, right? So all these are liquidity, right? And then we have this fair value gap, but this is 17. Let's wait for the 21 to print. The 17 printed, and then the 21 went up, right? We've still haven't taken this liquidity. Let's see how the 21 works. So because sure, I didn't want this candle to go. Because the 21 candle, you see, we don't want to trade the Asia section, right? We could see that still this liquidity is intact, right? And then this 21 candle, we had the 17 candle forming the swing points, forming the failure swing. And then we had our 21 candle as our third candle closing strongly. But we don't want to trade the 21 candle. So because we allow the 21 candle to print, and now the 21 candle close so strongly. The 21 candle close so strongly, it is telling me that the 1 a.m. candle is willing to also expand, right? Because price has formed that reversal, right? So let's go to the 5 minute time frame, right? And let's just wait for the 1 a.m. candle to open. And we are going to trade on this pair, right? Because it's the strongest pair. So let's see how the 1 a.m. candle will open. This one is 1 a.m. Okay, let's see if we get a CISD. And price has also taken this. I want price to close over it, but this is too small for me, so I consider it as a bearish candle. Looks like this is also showing strength. Well, let's just see. Let's just look at what's happening. If still, I want price to close over this, but price didn't. Price came down again. Okay, so there is a perfect CISD. These candles are a little large, so I consider this as my CISD. You can then place your long position over here, right? And then place your short position at the swing points, right? And then you can target 2 hour. Or has price taken that liquidity? That's of the way price is done. Let's see if we have any targets still available on the forward time frame because of our price is moving down. Why is this moving so slow? Oh, so our target is already being met, right? I don't know if there are more targets. Okay, there are more targets, right? So we can still trade this. Let me go to the daily time frame and look at what is happening. I still expect price to move up small. So let's see if we are going to get 2 hour or there are still more target that price can go for. And we didn't get it. Price didn't continue upwards. Now, I can say that the reason why price didn't continue upwards is because we've taken this external range liquidity, which was our target, right? And as price has taken this, it is likely to turn because at the swing low that formed CISD. So this trade, I was kind of doubting it because we've taken this external range liquidity. And because this external range liquidity is taken, price is likely to turn. You get it? Price is likely to turn and tag a fair value gap. So let's just see how.
Voice is missing.
Hello. You said where did I place the stop loss? I placed it at, let me go back and show you. At the swing low, right? The swing low that formed the CISD. And this trade didn't work, right? Because we've already taken external range liquidity, right? You have to always apply this on the 4 hour time frame as well. Price has taken external range liquidity. So there was no need when the 1 a.m. candle opened, it went straight. Let me look at the time where this was rated. Let's do okay. So I think the 4 hour time frame is moving a little bit faster. So let's just look at this, right? Let's look at this. So the reason why it didn't work, right? The reason why it didn't work is because we didn't get a nice price action in and out. Look at what's happened over here. There is not a sign of expansion. You can see price is kind of consolidating. So let's wait to see if we will get a nice green shape, right? So we could clearly see that there is a nice V shape. This one was kind of consolidating, right? Look at how this one was moving. But this one showed an aggressive price movement in and out. But this one was kind of not really. So we could position ourselves around this area where we had the CISD. This was the best place to, position ourselves rather. because the 4 hour time frame is a little ahead. Get it? So that liquidity is still intact. The 4 hour time frame is ahead. You place your stop loss at the swing low, right? At the swing point, at the swing low, and then target 2 hour. So let's see if price is going to give us that. And you could see that price gave us that 2 hour. So the 4 hour time frame is a little ahead. So the reason why this setup failed is because we did it. I want to always see this. I want to see an aggressive price movement in and out. This is of um, a signature of expansion. Usually, when price it happens that way, price will leave a fair value gap, right? To leave a fair value gap. This is what Ajo calls it sharp turn, right? So looking at this, this wasn't a sharp turn. We had no fair value gap. No fair value gap was produced. But looking at this, price went in and out, even leaving a fair value gap. And you could see that our 2 hours presented, right? So I think we will end here and then we will do more live section, right? I'll trade live with you from next week onwards so that you can get things more. But then I'll send you the recorded video so that you go through in case you didn't hear me well. You watch and then you get to understand what I am trying to say, including the video I just posted on my YouTube channel. Is there any question? If you have any question, you can chat and then I'll respond. So I think you
Okay,
understand.
no, 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 no.
You said
Yes, yes.
you understand why this setup failed.
I understood, understood, understood.
We didn't get that sharp
Yes,
movement in and out. But look at this, we had that sharp movement in it. So our intact was
yes.
still our point of interest, right, was still intact on the 5 minute time frame. Although on the 4 hour time frame, it looks like price had already raided it. This one. It was still intact because it looks as if the 4 hour time frame was ahead of the 5 minute time frame. And you could see that our target has already been reached. Let's look at how the 5 a.m. candle is going to close. Let's just look at it. If it closes strongly, then that means that we can continue trading the 9 a.m. candle. Let's see. So you know the reason why I told you that you should always apply when your external range liquidity get taken, when your target is met, just stop trading or move to the next pair. You can see our target is already been met. And you see price is not willing to continue again, right? So we are going to do more live section and then everything will be clear. So thank you for joining. Have a nice day.
Okay, thank you, thank you,
I'll send you the
thank you.
recorded video. I'll send you the recorded video.
Okay, okay, okay. I need to watch once more that
Okay,
video.
okay. So have a nice day.